let's say that you have the employee's portion of FICA and income taxes withheld for the quarter was $15,000. Well, if you get hit with this penalty, the penalty is going to be $15,000. The tax is still $15,000. Then you also are going to get hit with a failure to deposit penalty, and interest is accruing on all that. So if you thought you couldn't pay the $15,000 before, how are you now going to pay this additional $15,000 and pay the other penalties and interest? It looks like your business is going to close.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, welcome to episode 36. Today we're going to talk about one of the biggest tax penalties that is out there. And of course, I have to break it down for you because I'm on my mission to fill the tax literacy gap one taxpayer at a time. And if you're facing this penalty right now, you don't even have to tell me. I know back taxes are ruining your life, but they don't have to. So let's get right into this episode where we're going to talk about payroll taxes and the trust fund recovery penalty. All right. Like I said, it's one of the biggest tax penalties that's out there because it can be 100% of the tax owed. Now, back in episode 28, you thought that was pretty scary with the accuracy-related penalty, where that could be 20% of the tax penalty, the tax liability that wasn't calculated. But 100%, and there's no cap on it. So let's say that the taxes that weren't paid for the payroll taxes were $25,000. Well, guess what? Your penalty is going to be $25,000 if you're facing this trust fund recovery penalty. But that's not the big kicker. The big kicker is it can be assessed to the business, and it can also be assessed to other people that the IRS deems responsible. So in today's episode, I'm going to cover what is the trust fund recovery penalty. Then we're going to look at why is the trust fund recovery penalty so harsh? Because 100% of the tax owed, that's wild, right? Then we're going to look at who can be held responsible for the trust fund recovery penalty. Because if you work in a business right now that hasn't paid their payroll taxes, but you have your hand on the payroll taxes in any way, you could potentially be held responsible. All right. Don't think just because you aren't the business owner that you're in the clear. So I want to make sure that you pay attention. So if you're not facing it yet, you can completely avoid it. All right. So what is this trust fund recovery penalty? The trust fund is the taxes that an employer withholds on behalf of the employee. So we know that Social Security and Medicare, that's not optional. That's getting withheld from your check no matter what, with the exception of if you have a certain government job. Because I can already see the trolls coming and being like, well, if you work a government job, we're not talking about that. We're talking about most businesses, okay? So we have the Social Security and Medicare. We have the W-4 for the employee, so that lets us know with the payroll calculator how much to we withhold for taxes. That amount is considered the trust fund, okay? Because Social Security and Medicare, we know that they track it and that we have a quote unquote account, right? To see how many Social Security points that we have for later in retirement. But we know honestly the money that's being withheld for that and paid into that right now is going to people that receive Social Security benefits right now. So that is part of a trust fund, okay? So the trust fund recovery penalty is going to be 100% of the trust fund tax. That is going to be the employee's portion of FICA and then the income tax withheld. And just as a quick recap, FICA is going to be the combination of Social Security taxes and Medicare taxes. So, with that being said, if you are withholding taxes for somebody and you're willfully not paying them, which means don't say, well, I had all these other expenses. Well, you can't steal from Peter to pay Paul. You can't do that with somebody else's money, right? So you, my friend, if you're in this situation, have become a tax evader. That's somebody who is willfully not paying taxes. If you want to know more about that, check out episode 34 where I covered tax avoidance versus tax evasion. All right. With the trust fund recovery penalty, the IRS has 3 years to assess this penalty. So you may be thinking, you know what? I'm in the clear. I haven't paid these payroll taxes back from 2021. Well, guess what? Today, right now, we're in 2023. The IRS still has 1 more year to hit you with that penalty. So if you have not taken care of making an arrangement to get those payroll taxes paid yet, I would go ahead and do so with swiftness. Now, once the penalty is assessed and hits your account, the IRS is going to have 10 years to collect. Right? So you may be familiar with that from other episodes where I talk about the CSED, which is the collection statute expiration date. This date is not going to be established until the recovery penalty is actually assessed. All right? So you may be thinking, the IRS is rough. They can throw people in jail because like I talked about last episode 35 with the payroll taxes, payroll tax penalties can be either civil or criminal. So they can actually throw you in jail if they find that you willfully did not collect or truthfully calculate the taxes. But why is this penalty so harsh at 100%? Well, friend, not only are you a tax evader because you haven't paid it, if you haven't paid the taxes that you withheld from your employee, then guess what? You are a thief. You've stolen not once, but twice, right? Because the employee didn't have an option to not give you the money. You automatically withheld it from their check and you said, hey, I'm going to take care of this for you and send it into the IRS. Then you didn't. So what you've done is you've stolen from your employee, then you've stolen from the IRS. Because guess what happens? When they go to file their taxes with the W-2, that hopefully you went ahead and issued the W-2, even though you didn't pay the taxes, your employee is thinking that they have credits towards their tax liability because of the taxes that have been withheld. So when they fill that out, if the IRS issues them a refund or gives them credit for the amounts withheld, they really don't have anything that they've paid in because you sat on it and didn't pay it. So not only is the IRS trying to make sure they get the money back for that, they are making an example of you like, hey, we want to make sure that this behavior, it's seen as not acceptable at all, so you will keep up with it. Also, it is a punishment, right? It's a penalty, and it can be death to your business if you don't get on top of it, okay? I used the example in last episode. Let's say that you have the employee's portion of FICA and income taxes withheld for the quarter was $15,000. Well, if you get hit with this penalty, the penalty is going to be $15,000. The tax is still $15,000. Then you also are going to get hit with a failure to pay. Well, they call it failure to deposit, a failure to deposit penalty, and interest is accruing on all that. So if you thought you couldn't pay the $15,000 before, how are you now going to pay this additional $15,000 and pay the other penalties and interest? It looks like your business is going to close. So make sure if you're having any issues at all that you get on top of it and set up some type of arrangement with the IRS. All right. We've talked about this before. Communication is key When you can't pay the IRS in full, they will work with you to make sure that they get their money. If you run away, take cover and hide, they can show up to your place of business. They can hit you with so many penalties that you have to close, but you have to make sure that you talk to them and keep the line of communication open to avoid that. All right? So who can be held responsible for this penalty? It's not just the business. It's not just the business owner. It's any person responsible for withholding, accounting for, depositing, or paying specified taxes and willfully failing to do so. So this could be the owner. It could be the treasurer of an organization. It could be an accountant. It could be an officer or a director or shareholder. It could be the bookkeeper. It could be Sue, the employee, okay? If she has anything to do with the payroll getting done. It could also be anybody that has signing authority on a checking account. So let's go back to the example I used earlier, okay, with the $15,000. Let's say we have a business with 3 owners. They also have, let's use Sue again, Sue in accounting, who tracks all the payroll. Then they also have a CFO who cuts the checks, right? So we have this $15,000 penalty. Everybody's like, oh my God, what are we going to do about this penalty? But then when Sue goes home, she has a letter from the IRS that says she's also been assessed a $15,000 trust fund recovery penalty. The CFO has the same letter, but of course addressed to them. And so do the owners. Because, again, the IRS takes this very, very, very seriously. Not only have you stolen from them, you've also stolen from the employee. So the way this works is when it is assessed to a specific person, it's attached to their social security number. So they're going to make sure that Sue from accounting actually is going to pay this penalty. And when she goes to file her taxes, let's say she typically gets a refund. Any refund that she would expect or anticipate to get is going to actually go towards this trust fund recovery penalty now. All right. Now, there is a way to actually get this trust fund recovery penalty removed if the IRS deems that you are not responsible. Now, there will be a series of interviews that you need to go through. There will be proof that you will need to show that you are not responsible. Now, the business getting rid of theirs is a little more tricky, but I don't want to say that it's not possible. So here's the thing. You all have heard me talk about tax representation, right? Where a tax professional, a credentialed tax professional, has to be either an enrolled agent, such as myself, a CPA, or a tax attorney. We step into the taxpayer's shoes and we negotiate on their behalf. Penalty abatement with payroll taxes is very tricky, and this is not a situation where I'm going to say, I never want to be the judge of your tax competency. With this one, you need tax representation. And like you hear me say in other episodes, it doesn't have to be me, but you most definitely need to get the help you need, because with a penalty like this, your business can be closed in absolutely no time, because the IRS does not play games when it comes to compounding interest on penalties. And if you don't get ahead of it, you'll keep getting hit with these over and over and over again. There have been businesses that have had to close and liquidate assets, and guess what? They don't even get the benefit of anything, any profit from the liquidation. It goes to IRS debt and any other debt they may have. So if you do like the way that I've explained this, you think that we would be a good fit to work with each other, I would strongly encourage you to go to bowenstaxsolutions.com and book your tax relief consultation with me. Now, let's say that you're no longer associated with this business and you're an individual facing the trust fund recovery penalty. Each person would be represented separately. Okay. Now, the business can be represented by the same person as one of the people deemed responsible, but I would not recommend you trying to go to the same representative that someone else is going to, because there could be a potential conflict of interest. Just think about it. Let's say we have Sue from accounting and we have the CFO. Well, the CFO is saying he's not responsible because it was Sue from accounting, and Sue from accounting is saying she just did what her boss, the CFO, told her to. Do you really want the same person representing you? Do you really think they could look out for your best interest if you're both pointing the finger at each other? Just something to take into consideration. Now, as I have said before, if you're facing this penalty, back taxes are ruining your life, but they don't have to. So make sure that you get the help that you need. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.